It's interesting, the LSE has always had a very acute focus on Africa. We've seen and we've recognised growth opportunities for a very long time, and in that regard we've attracted a lot of African businesses to London to come and raise capital, particularly on a market that's so internationally focused. But on this specific trip, we're part of the Lord Mayor of the City of London's business delegation, which is visiting 4 African countries, including Nigeria. And the idea really is to look at ties and partnerships and ways of extending the expertise of the city into the partnerships that can exist here in different parts of Africa. Particularly we're very enthused by the Nigerian opportunity, which is a great one and one that I think needs to be harnessed at this point in time.
Right, tell me more about why you think Nigeria should be looking at the LSE right now. Obviously we know that the government has issued a Eurobond recently. That's probably set the scene for more issuance from Nigeria. We've seen very little of that so far, but what are your expectations and why should companies in Nigeria be looking at the LSE for listing?
I think companies from Nigeria have a plethora of choices in terms of where they can go to for listing and raising capital. But the important thing about listing and raising capital is to do it in a very predictable and a robust environment, and also to do it in an environment that understands your equity story the best, so therefore can give you the best possible valuations. That's what London does because of a unique history between the UK and the rest of Africa. In particular, at this moment in time, the investors that are based in London are looking for growth and looking for return. There's no growth or return in Europe at this moment in time. So companies are looking towards Africa, where Nigeria is growing at 8%, where Kenya is growing at 5%, and they want to be exposed to those returns. The best way for them to do that with reduced risks is to invest in companies who've chosen to take the higher regulatory bounds of an exchange like the London Stock Exchange, be listed there and give a conduit to investors from other parts of the world to continue to fuel the growth in the region.
And talk particularly about the debt issuers from Nigeria, particularly Nigeria and of course the rest of Africa. Give us a sense of the appetite for debt capital raising in London right now.
Debt is obviously something that has been not a good word in previously, mainly because too many companies were over-leveraged. And this part of the world is definitely under-leveraged. And I think in that respect, it gives a great opportunity. Fixed income investment in Africa has gone up in excess of 10 to 15% over the last year. And that's based on very well-run companies in Africa, solid management teams, and a conducive environment now that's put together by the recent sovereign issue in Nigeria.
But many will say that the process is somewhat tedious for many African issuers, given obviously the regulatory requirements from exchanges like the LSE. How can companies really succumb to those challenges?
I don't think these challenges are insurmountable. I think what we have to realise is in Nigeria now in particular, we have a wealth of expertise and talent that has been brought from abroad. We've had people at business schools in the US, at business schools in the UK, and it's very important that you've brought that management back here, and not only that, at the execution level as well. So the processes that companies have to go through are actually well understood, and companies now need to purely ensure that the level of execution continues to an extent that encourages further opportunity. Companies have been concerned about the level of disclosure and the level of transparency. I think these are the only real areas where we need to look into greater involvement from all parties. But in terms of expertise is here in Africa.
Well, to what extent would you say the challenges with sovereign debt in Europe right now is a drag on possible issuances from Africa?
That's a very good question. I think in terms of sovereign debt, it's very much a European problem at this moment in time. There are fiscal issues, there are issues around the entire social network in Europe is set to change. The safety net that is there is a real issue. It's probably less prudent to invest in European debt right now unless you're looking for supernormal returns. But if you're looking for returns in an economy that is yet to be developed and where the growth rates potentially are more sustainable, then this is a perfect juncture and a perfect opportunity to do that. And I think that this is what we'll see as we move forward.